Hi everybody, it's FIBO Group and you're watching to the Market Watch review. The Asian Pacific's largest markets fell by more than 2%, including Japan's Nikkei. After falling 1.7% last weekend, Europe's Stoxx 600 has fallen 1%. U.S. futures predict a lower gap opening. The dollar is stronger against all major currencies. A stronger dollar and rising rates are not enough to stop gold from being sold at a new low, $1,720.45. October WTI stands at $93.75. Asian Pacific market. Kuroda remained firm in his support for a loose monetary policy. He claimed that Japan's inflation was almost entirely a function of higher commodity prices. He predicted that inflation would slow down to 1.5% next year. It was 2.6% in July, but 1.2% when you exclude fresh food and energy. Kuroda's inflation outlook does not differ from the market. According to a Bloomberg survey, Japan's 2023 CPI is expected to be 1.3% at the headline rate and 1.4% core. In late Asia, the dollar rose to JPY 139.00 due to an increase in U.S. rates. The Australian dollar experienced a bearish outside session before the weekend. It traded on both ends of Thursday's range and settled below Thursday's lows. Today's follow-through selling has seen it reach $0.6840. Market of Europe. The rise in electricity and natural gas prices will drive inflation higher and increase the pressure on the cost of living. The UK regulator confirmed the suspicions before the weekend. On October 1, the cap on electricity and gas will be raised by 80%. This will likely mean that UK inflation will rise beyond the BOE forecast of 13.2%. The new UK government will be under intense pressure to support households and businesses. Last week, the euro was retested at its 20-year low of $0.9900. It then experienced a short covering rebound in early European activity that lifted it to $0.9960. Sterling fell to a 2-year low of $1.1650. Market of America. The Federal Reserve is often accused of not having the tools necessary to deal with the price rises caused by supply shocks. This is a common complaint. A Jackson Hole paper illustrates another tactic. Fiscal policy is responsible approximately half the recent rise in inflation. When inflation is fiscal, monetary alone is ineffective. Powell stated that the Fed is responsible for price stability regardless of any threat to it. The greenback has risen against the Canadian dollar due to the risk-off mood. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.